There is a generational wealth opportunity hiding in plain sight, and yet Wall Street doesn't see it. This is not short-term, quick money, couple $100 here and there. I'm talking about asymmetric returns in the long run, life-changing money. And it's all coming from an industry that doesn't seem to get a lot of love. It's the Canadian oil and gas industry. Now, you might be thinking, how is Canadian oil and gas going to have a long-term asymmetric upside? This isn't artificial intelligence. We're not talking about electric cars or software development or e-commerce or any of these big sort of world-changing companies. How could Canadian oil and gas deliver these returns? Well, today I'm going to explain exactly where my long-term bull case comes from for the Canadian oil and gas industry, why I believe it is a seriously fantastic investment right now for both the near and long term, and why I think Wall Street hasn't quite grasped the opportunity here. And so investors like me and you have an opportunity to invest in this industry. Let's start by talking about where exactly my long-term bull case comes from. And in part, it comes from an analyst, talks on BNN a lot. His name is Eric Nuttall, and he talks in great detail about all sorts of elements in this industry. But recently, he had an interview where he mentioned a few key points, and it just catalyzed me to make this video. Because he points out that in the next couple of years, he expects a peak in US shale oil production. He also expects a peak or near a peak in non-OPEC production, and he expects OPEC Plus to fully normalize its spare capacity levels, all within the next 2 years. Now, we can argue back and forth about whether or not US shale oil is going to peak. It's been an argument I've seen 1,000 times in this industry. I've actually even seen analysts claiming it happened last year. But there's no argument that shale oil will continue on forever. Just based on simple geology, it cannot last forever. This is not a renewable resource. And the specific shale oil basins in the United States are expected to peak at some point in the next few years. Be it sooner or later isn't really up for me to tell. But at current production, it doesn't seem like these resources are going to last for long-term investors. Now, non-OPEC production is really hard to generalize about. There are always new resources being found, be they offshore or more shale oil or whatnot. However, there are lots of big new non-OPEC producers in places like South America that seem to be at a sort of peaking point. So I respect that argument. I see that argument there. And of course, with OPEC Plus, you can always expect them to do what's best for them, which is try and make oil as profitable as possible. Now, why does this impact the Canadian oil industry? It all comes down to the different kinds of oil being produced in Canada versus the US Permian Basin. Now, shale oil, I can generalize about a whole bunch, but essentially, they have a short time frame. We are talking a few years until you see serious declines start. And again, few can mean 2 or it could mean 6. But we're talking a couple of years before we see declines. And we're talking prices, break-even prices, somewhere in the 60 maybe dollars per barrel region. Now, again, I'm generalizing. It's obviously going to be different for different companies, but the price is actually not quite as low as it seemed in 2014. In Canada, in the oil sands, it's a little bit different. Thanks in part to the massive innovation that I talked about recently on the channel, Canadian oil is break even at dramatically lower prices. I've seen companies like CNQ argue that they can continue to grow and grow their dividend even if oil's at $50 a barrel. I've seen some companies argue they can continue to break even as low as $35 a barrel. Again, I'm generalizing here, but much lower prices and the longevity of these assets is dramatically different. Suncor, for example, argues they can continue to operate with non-substantial declines for 60 years. 60 years, that's an order of magnitude more time than the US shale oil Permian Basin manufacturers, producers argue they can keep going. And so in Canada, we have a massive opportunity because our producers can produce oil cheaper and for a much longer time than their competitors in the United States. Why does this matter? Well, of course, as usual, I'm going to bring up the differential. Canadian oil is cheap, mainly because we don't have the infrastructure to export it to the world, thanks in part to geography, thanks in part to policy. Now, I've talked about how infrastructure is being built, how I expect it to continue to ramp up, and how I think that is a game changer over the short to medium term. How I think more projects bringing more Canadian resources to more markets is huge for this country, and how I think investors should position themselves to profit. All of that remains true. But now imagine if in the long term, as all of these infrastructure projects are completed, as Canadian resources see better markets, as we see them sold at a fairer price that benefits us as investors, now we see American shale oil production start to decline. And then all of a sudden, where is the argument for the differential there? If the Americans cannot buy Canadian oil, where are they going to get it? Are they going to continue importing so much from Saudi Arabia? Because now there's far more competition for the same oil that they were importing back in the day. Are they going to import it from Mexico? Are they going to import it from Venezuela? All of these are potential target companies, countries to work with. But really, the obvious answer for them is going to be Canada. And in a world where we've managed to build out a little bit of infrastructure, where we've managed to get more of our product to more markets, it's going to be really hard for them to ask for the same kind of volume at the same kind of discount that they once got. Now, obviously, I'm projecting here, but I'm not alone. Eric also believes there is going to be an absolutely monumental bull run in this industry. And I think we're not looking at 10 years down the road for this bull run. I think we're looking in the next few years. And I think a big part of that story comes from the nature of investment. I am a long-term investor. I invest for the long run. And for a long time, I have been told there is no future for oil investments, that I should be putting my money into things that will benefit society and that will last. I've heard people even comparing oil companies to cigarette companies, saying that it is a dying industry that is going to be replaced. The thing is, I don't necessarily buy it, and I think 2025 has been a fantastic example. In 2025, we've seen more and more countries and companies and banks and entities around the world asking for more hydrocarbon resources, importing more LNG, securing more contracts, investing more in these industries. Even here in Canada, we have seen political consensus across the population that we should invest in pipelines and in energy infrastructure. Just a few years ago, maybe just a year ago, you would not be able to convince more than 2/3 of this country to agree on anything. And now somehow we've seen polls saying as high as 75% of the country are all aligned that we should invest in this industry. This just goes to show that these resources are needed, maybe not just for powering personal vehicles, but for industrial use, for asphalt, for plastics, for jet fuel, for a million different things. And thanks to Canada's long-term assets, thanks to our ability to continue producing oil profitably, with some of the very best engineers in the world working on things like carbon capture and cleaner extraction methods, we are going to see massive, massive returns. And investors are going to start seeing this. Now, when I talk about investors, I'm not saying you and me, because we already see this trend. I'm talking about big money. And big money loves nothing else if they don't love front running trends, which is why I think there's going to be a massive bull run in this industry in the not so distant future. And I think building a position now, dollar cost averaging, while the world is so afraid of change, is a great opportunity, because that fear leads to better prices, which means we can afford to get bigger positions. We can take advantage of the compounding machines that these companies already are, with some of the best dividends, the best shareholder returns in the market, and we can wait. And when we see stories about different basins starting to decline, when we see more infrastructure built, when we see all of these trends, you're going to see stock market returns explode. That's about all I have for you folks today. I hope you enjoyed the video. Again, I recommend you check out Eric Nuttall's interviews and his talks on BNN. He goes into a great amount of detail. He is a really knowledgeable person, and he did inspire a great deal making this video today, and the reason why I thought it was an important topic to bring up. And if you're interested in talking more about the short term for the oil or the natural gas industry here in Canada, I have videos on both of those out recently on the channel, and I will link them in the description down below. With all that being said, I hope I see you in the next video.